So again, you know, the software programs, emotionally, they're not there. In other words, it's mathematics. You can't put mathematics on emotions, all right? So, and all of you know that, right? So you're aware of that. So what we want to do now is to start practicing looking at these narrow sideways channels. By the way, this narrow channel, if it breaks above the channel, we buy because we're dealing in physics. Physics says that a body in motion tends to stay in motion, all right? So if it breaks above the channel, we expect it to continue going that way. If it breaks below the channel, we expect it to go this way, okay? And for our purposes, we don't care up or down. We make money either way, all right? And that's where you want to be. You want to be able to play the market short. Why would you not play the market short? To make money, if there's more money to be made in those kinds of market environments. What do you think is a percentage of population that plays the market on the short side? What do you think?
2%.
It's less than 2%.
Can you explain what you mean by that?
I am. Yeah, I'm going to go through an example, but I'm going to go through it after you've seen the charts, okay? So here's what we want to do. We want to start looking at channels. So you're going to train your eyes today to see a channel, all right? And say, okay, I see a channel formation, all right? So I'm going to put these up. I'm going to turn the lights off. So I'm going to start covering some of these charts up, and you're going to start predicting where the prices are going to go. But for right now, I just want you to see that this was a channel formation in here. It broke above the channel right there, and prices went up on the break. So again, you're training your eyes to start looking at these things. You know, and by the way, the rule of thumb is if it looks like a channel, it is a channel. All right? That's the rule of thumb here. All right. So here's a chart here. Two of them. Sorry, got two of them. Here's a chart here. You can see very well defined top, very well defined bottom, and then if you're waiting for it while it's in this channel to break out. Here's the breakout above the channel. So where would you predict prices are going to go? Up, and it went from about 4.5 up to 13.5. Okay, and so that's how you're going to make money when you see something breaking out of a channel. All right. There are other indicators we can use in a channel, and I'll share a couple of them with you today, or one or two, just so you get an idea. But here's what you're trying to do: is train your eyes to see this. There's a break above the channel, predict that prices will probably go up, and they did in fact go up from 10 to 30, okay? So when you have some of those big moves from $10 to $30, that's the kind of moves you're looking for, okay? Because if you've got that strategic plan and one or two of these make, you know, 200, 300%, you're going to make pretty decent money, okay? All right, here's another one. By the way, these are weekly. This was a weekly chart. We can do it on 5-minute charts if we want, and I'll show them to you in just a minute, okay? So here's another one right here, channel right there, channel here. You're training your eyes to look at it. You just keep following it in the channel, and you keep following it, still in the channel, still in the channel, and then right here, what happened right here? Break above the channel, the price is most likely going up, and in fact, from 2 to 16, by the way. So those are not bad moves to take advantage of, all right? We also use what's called stochastics, which is a momentum indicator. I won't go into that today, but the simplified form of stochastics is when you see something in a channel like this and it's moving sideways, but stochastics down here is going up, you can almost predict that it's going to break above the channel. Stochastics is a momentum indicator. We use that one too. There's the break above the channel, and prices should go up, and in fact they did. Okay? So again, you're just training your eyes to look at this. You're using Japanese candlesticks. You're using stochastics. You're using other indicators to help you make a decision about the direction of that particular market. Okay. Here's a channel right here. Which way are stochastics going?
Up.
And they're rolling up right here. So where would you predict this is going to break? Above the channel. It does break above the channel, and prices start to go up.
So you're saying with stochastics, you can get in before it makes the jump?
You could, and using stochastics and Japanese candlesticks, many times we do get in before it takes off, okay? But if you're very conservative, you wait until it breaks, okay? So everybody's going to be different. Everybody manages their accounts a little bit different.
And is
okay?
there a percentage in there, or where in the stochastics you say, okay, because it's moving in this direction?
That's gonna be your stop loss, or, your stop loss, or you have a profit target already in mind, okay? So, but the stochastics by itself, you never trade off of those. You gotta have other indicators. What you're trying to do is to get several indicators telling you the same thing. So if you get several indicators telling you the same thing, that's a good trade. The odds now are very high in your favor.
What's Japanese candlestick? Is that a theory as well, or other?
It's just a chart pattern, and it's a completely different way of looking at a chart.
Are you gonna show us?
These are bar charts here. These are bar charts. It's just a bar, okay? And then, so you can play them off of bars. Here's a channel here. This is off of weekly corn. Where's the stochastics going?
Oh,
Up here. So it breaks above here, and prices go up there, okay? Yes.
okay, can you find these charts? Do you
Well,
use
there's
them?
bigcharts.com is for stocks, and I'll put them up in just a minute after the break, okay? Bigcharts.com is for stocks, futures.tradingcharts is for stock, commodities, and then forex.com is for foreign currencies, or there's several we can use as well. By the way, this can be done on mutual funds and bonds as long as you can look at the chart, okay? Here's the German bond market years ago, right there, and take a look. Look at this channel right here on the German bond market. So if you want to know, and look at stochastics going up. So here's where the break above so if you want to know if German bonds were going up, well, there they go.
What exactly is stochastics measuring?
It's a momentum indicator. It goes back and measures price movements in the past, okay? And there's a big formula for it. There's books about that thick. All you want to know, if it's going up, it's a good sign it's going to break above. If it's coming down, you're going to go on the downside, okay? That's as complicated as I make it, okay? So, a lot of my students, they tell me that they're semi-retired, and I tell them, well, I'm semi-retarded, so that's why I got to make these real easy, okay? Real easy and very simple for me to be able to use them. So, Japanese candlesticks, go to the bookstores later on today and see how big those books are. Japanese candlestick books are about this thick. Most of them cost anywhere from $50 to over $100, okay? Too complicated, folks. You're not going to go spend, weeks going through 500-700 pages. Why don't you just learn 6 or 7 of them that are very common and that you can make money and practice making money off of? That's my philosophy. Make this thing as simple as you possibly can.
Do you have a chart of a Japanese?
Yeah, and I showed you one there. It looks a little bit different. It's not a bar, but it looks just a little bit different, okay? These are Japanese candlesticks here, okay? Notice how they're not bars, okay? So those are telling you something. Those Japanese candlesticks talk to you as well, okay? So a bar chart looks like this, this is what a bar chart looks like. These are bars, okay? Whereas Japanese candlesticks look like this.
So they put a little bit of symbolic intelligence in the bars.
Yes,
Is that what they're
yeah,
doing?
yeah. Well, they're showing you what the open, high, low, and close looks like from a picture standpoint.
Okay.
Okay. So for those of you that are very visual, it's a good sign. Okay. All right. Take a look at neighbors drilling. Okay. And this is again how you can tell stocks are getting ready to go up or down. Here we were in a channel. Can you see that channel there, folks? It's right there, and then all of a sudden it breaks above the channel there, and then this is neighbors drilling, and boom,
But
there it goes.
and just to, a what if, it almost looks like there was a channel and then it broke down. Why wouldn't you have sold when that thing dropped before the up?
Well, remember I said you use several indicators, so look at this way. Which way is that pointing?
Yeah.
So you can tell that there's a false breakout on the other side, okay, by looking at several other indicators. But I'm not going to go through all the indicators we look at, but there are several we look at. Yeah.
So you call this a narrow sideways channel. So how narrow is narrow? Like what should be that margin that you would consider that a good sized channel?
So, number one, I look for about 7 to 11 bars. But typically I like 9 to 11. 9 to 11 bars in the channel. Now the price is usually going to be what's the dollar amount in the channel, because you're going to buy at the top of the channel. Where's your stop loss? At the bottom of the channel. So whatever the bottom of the channel is, that's how much money you're going to lose if it ever comes back and hits the bottom of the channel. So the channel is going to be dependent on what's the dollar amount between the top and the bottom. And if I know that number, then I know I stand to lose that if I'm wrong on this trade.